Very good afternoon, good morning. Welcome to FX Week Ahead live market analysis with myself, Giles Coughlin. Very warm welcome to you, Alejandro. Good to have you. CN, welcome. Nahar, Philip, Jaranja, welcome. Good to have some familiar faces here, and looking forward to just giving us a rundown on what to expect for the coming week. And don't forget, as we look at different entries, exits, different instruments, the whole idea of this webinar is not that it's a signal trading service. The whole idea is that you look over my shoulder, see how I go about analyzing the market, managing risk, and the idea is you can take that into your own trading and develop some of these skills. Those of you who've been here for a long time know very well how it works. Good afternoon, Kingsley. Good to have you here. Let's just swap this around. Now, what we're looking at today is I am away teaching in Dubai on the 29th of September. I'll put the details up here for anyone who is based in the UAE. Otherwise, we're going to be looking at trading the US core PCE print. I want to deal with that today. Usually, I would have done that on the workshop topic on Wednesday. We're also going to cover the dollar, the yen, and the pound in particular, as well as looking at gold and silver, the euro, pound, US dollar. There is a lot going on, and I need to keep us exactly on track. So it's going to be a busy session and a fast session. But don't worry, because you can always come back and listen to the recording if it goes too quickly. Don't forget, hi Philip. Don't forget to use the Q&A box and the chat box. I will be covering that as we go through the session. Right, I've got a lot to cover, and I need to get on to make this clear. First of all, let's just take a look at what's going on with interest rate markets. Now, take a look here. If you notice, can you see the Federal Reserve? You see this blue line? That was interest rate expectations from last week. The green line is interest expectations from this week. Federal Reserve interest rate, the terminal rate has now risen to 4.8%. up from 4.5%. That's for the Federal Reserve. Look at the Bank of England though. Bank of England terminal rate, unbelievably, is now over 6% versus 4.5% from last week. Huge interest rate hike expectations. That's all on that fiscal stimulus plan from the UK, flooding the market with money, and the market's really worried that it's only going to fuel inflation. Then if we look at the ECB, see, look, interest rate terminal rate expected now to be 3.12%, up from just under 2.75% last week. So interest rates are expected to go up in the US, in the UK, and in the Eurozone. Why? High inflation. So take a look at equity markets, and what do you see? You see equity, that's the majors. You see equity futures markets. Now we'll get there eventually. Sorry, I've been messing my charts around today. You'll see equity futures markets have been pressured. See, S&P 500 just come up to the cash open in the US. Dow, NASDAQ, all pressured futures market. DAX, Euro stocks. China's 50 is a bit supported because there was news that Chinese banks were ordered by the government to buy stocks as they fell. FTSE 100 lower. So what are stock traders telling us? Look at the VIX. That's red, elevated above that 32 handle. This tells us that equity markets are scared that higher interest rates is going to mean less profitability for companies. So there is a negative sell bias in stocks. Do we want to sell at these levels? No. Will we favor selling from rallies? Yes. That's the big narrative. And it's been a shift over the weekend. And a lot of it has been prompted in the UK by this very large move. And you can see this huge move in the pound. You see the way the pound fell sharply lower? This turquoise line is the pound. The pound fell very quickly around 1:30 a.m. UK time. Typically, when you get very, very illiquid markets at the start of Sunday's open, you tend to see short, sharp moves. That's resulted in the pound selling off quickly. And you can see here the pound US dollar pair has fallen sharply lower in a kind of flash crash, and now prices are retracing. Now, there is a near-term buy bias at market with stops underneath the S1. Let me show you why. There's a comment here from the Bank of England. Bank of England is reportedly preparing an intervention to help shore up the pounds at 12.42. It's understood that announcement today is probable but not definite. The bank declined to comment. That was confirmed with a Wall Street Journal comment, Bloomberg comment. Bank of England still to decide if it will comment on the pound, according to Bloomberg. So this flush, heavily lower in the pound has got the Bank of England's concern. And what they might do is they may hike interest rates. Okay, so if the interest rates are increased, it could be by 100, 150 basis points. They expect the pound to rally higher. Okay, so buying at market makes sense. Stops under S1, looking to take profit at that pivot point. If there's intervention, looking to take profit at that 1.1100 region. Okay, so just keep that in mind. Euro US dollar, a little bit pressured on that weak German IPO data. I'm not chasing that lower, not chasing the dollar index higher, but the pound US dollar does make sense buying at market, stops underneath that 1.0683 session on potential intervention from the Bank of England. So that's where we're at with that. Now, looking at the dollar, that's the next thing to look at. What we can see with the dollar, just checking there hasn't been any news of intervention. That would be just like a buy on a buy at market. Now, looking at the dollar, you can see the dollar has been gaining and gaining and gaining. And the reason for the dollar gaining is those aggressive Fed hike expectations. And we can see like almost a blow off top in the dollar potentially coming up there. This could be a dollar peak. Now, if we see inflation peaking on the US core PCE on Wednesday, then you could potentially look for this to move lower. Okay. Otherwise, if we see dollar safe haven bids coming back in, then you could potentially expect this to be a flag movement, and anything a break higher above this on risk off trading, you look for a run up to that R2. But this is showing rejection at that R1 resistance pivot point, and dollar not worth chasing longs here because it's so heavily bought. We saw the heavy interest rate expectations driving the dollar higher. From here, we just want to wait and be patient. Now, let's have a little look at the calendar as well now. We had that German IFO print coming in today. Now, it's below expectations, current conditions low, and the business climate all low, in line with slightly below forecast, but above the lows for the current conditions and the business climate. IFO expectations below minimum expectations. So
according to Bloomberg, EU nations are reportedly delaying Russian oil.
Okay, so just checking that BOE headline. Now that is negative for the euro, but as I said, we don't want to chase the euro lower. A lot of bad news has been priced into the euro. So best opportunity will come from some kind of relief, some kind of boost to the euro will be what we're looking for. So negative news is kind of pretty heavily priced in, and we would favour selling on rallies rather than trying to join this momentum to the downside at the moment. That kind of makes sense. For the rest of the today, we have a number of central bank speakers. So we have BOE's Tenreo speaking at 5 o'clock, and watch out for that Bank of England intervention. If there is an intervention, it would be go long pound US dollar and market. And there is a pound US dollar at market long bias anyway, or you could go short euro pound. Also look out for Fed's Mester speaking 9 o'clock later. Tuesday, we've got more Fed speakers. We've got Bullard, Evans speaking. Look for comments from them. Again, President Lagarde, look for that to move the dollar and the euro. We also have consumer confidence. If that consumer confidence remains high, that can continue to support the dollar. But if it's a big miss, then that will start to increase expectations for the Federal Reserve being less aggressive in hiking interest rates. Wednesday, we've got Fed's Daily, Fed's Bostic, Fed's Bullard. Again, watch out for Fed speakers. We've also got Bank of England speech, which could be very interesting given the latest moves in the pound. What we're looking for here is any news, hints of Bank of England intervention, hiking interest rates. That would be near-term, short-term pound strength, but medium term, sellers on big rallies higher, but only selling from big levels now. Got US Fed Devon speaking and UK BOE speakers at 7 o'clock during the session, as well as IEA inventory levels. Just having a quick look at commodities, what you'll see is that commodities are all pressured lower at the moment. And the reason commodities are pressured lower at the moment is because of global recessionary fears. If the global economy is expected to be in a slowdown, then the global economy will need less commodities, less demand. A stronger dollar means commodities are more expensive as well relative to how they were previously, and that pressures WTI, Brent crude, gold, silver, copper, iron ore prices, all pressured on that strong dollar and looking for further retracements in commodities on global recessionary fears does continue to make sense. On Thursday, now we have this flurry of ECB speakers. So the expectations at the moment for the ECB to be more aggressive in hiking interest rates, but the dollar is really pushing the euro lower at the moment. So we would need even more hawkish speak from the ECB to push the euro higher, and look for interplay between the euro and the pound. The UK's outlook has really deteriorated on this flush lower. And just so you understand what's going on, we saw this, I flagged this a few weeks ago, which was this break in correlation between bond yields and the pound. Normally, when you see yields rise, you normally see a currency rise with it, because rising yields means that bond traders are expecting higher interest rates. But when you see rising yields but the currency falls, it's a sign of distress, because it means that bond traders are still selling bonds, and in order to get people interested in buying bonds, the yield has to be higher. And that's the sort of thing you see with emerging markets, that you'll see a very high bond yield. Why? Because investors are worried about investing in the country or the government. So you have to offer a good yield before they will even step in, as bonds just get sold. And that's what bond traders were doing. They were just selling UK gilts. They didn't want them. Because why? There's higher debts expected, that the UK is going to struggle to potentially pay those debts, and the UK's fiscal stimulus package, which is well over £300 billion, is expected to fuel inflation. And so as a consequence, we've seen yields pushing higher, but the dollar pushing lower. So that's the big picture in pound. That's why we've seen the pound selling off so sharply. So continue to look for that interplay between the ECB and the BOE, and euro pound downside should still be favoured for the moment in the big picture, but watch for that dynamic to potentially change. And we've got a flurry of Fed speakers coming up later. The best opportunity for the week is this core PCE print. Now, what we're looking here for that core PCE print is if we get a miss. Now, it's expected to come in for the core at 6.2%, which is slightly below the prior of 6.3%. So this should weaken the dollar heading into Friday. Okay, why? Because the headline is expected to 6.2, lower than the prior of 6.3. The Fed likes the core reading, it gives it a lot of attention, and you can see the year-on-year print is due to be at 4.7%, a little bit higher than the forecast, but the headline is expected to drop lower. So on balance, this should keep the dollar weak into the meeting, but if we get a print now below 6% for the year-on-year, and if we see the core coming in below 0.1% and the year-on-year coming in below 4.5%, and if we see a flurry of red across that core PCE print, then look for shorting dollar yen and probably something like long pound US dollar or long euro US dollar. So long pound US dollar, depending on what the Bank of England do, and long euro US dollar makes sense. So just watch out for that PCE print. It's the most hotly anticipated event. If we see a different reaction, so if we see the print come in and it's high, say inflation comes in above 0.6%, above 6.5% for the year on year, and the core month on month comes in above 0.6, and the year on year core comes in above 5%, 4.9%, anything like that, then you could expect the dollar to gain, and that would be another leg lower in the euro-US dollar. So that would be either going long dollar index or short euro-US dollar. Both of them are equivocal to each other. We then have a flurry of, not flurry, we have a final flourish with US Fed Williams speaking. Now, another headline to look for is the Chinese PMI prints. On October the 16th, you've got China's economy, their Congress meeting for the Communist Party on October the 16th. And it's widely expected that there's going to be support announced for China's struggling property sector. So as a consequence, if we see a good print here, if it comes in strong, above expectations, and if all three are in expansionary territory, above 50 for the services and the manufacturing PMI, if all that comes in strong, then that should support China's 50 index, and it can potentially lift sentiment, because obviously China is such a huge economy. It's the second largest trading bloc in the world. Number one is the US, number two is China, number three is the Eurozone. So a lift here has the potential to lift sentiment, but also it has the potential to lift sentiment ahead of the Communist Congress Party on the 16th of October. So that can be important if you're trading Chinese stocks. And if you just look at China stocks, you can see that China stocks are now, are pulling in to that key kind of support level, right? Just around here. And that is an area you'd expect to find buyers leaning against. And watch out, because China's banks were ordered to buy Chinese stocks. So that should be supportive for China's 50. You can see pound US dollar just moving higher now. So the obvious place to take profit is just up into that daily pivot zone, just underneath that 1.0980. That would be the profit area to take profit, and then wait and see if we see anything from the Bank of England. Not sure if we've had anything from the Bank of England. I'll just check the squawk to make sure that we haven't had anything. No, still going on the back of the sentiment from that BOE intervention chat later on. Okay, so you can see there is an enormous amount going on in markets. With markets like these, just a little warning, when you've got these huge moves, and you've got like 300, 400 points, and you're getting your stops underneath key levels. Remember that stops have to be wider, so just make sure you manage risk and you're not inadvertently getting sucked into big moves. These volatile moves are great for FX trading. These big pushes and moves higher are very helpful for what we're looking for. The seminar that I'm running in Dubai is on the website. So if you are UAE based, I'm just going to send you the link. This is the latest seminar. So I'll just put that in the thing. So if you're around in Dubai, do come and check me out. It's the Shangri-La Hotel in Dubai. I think this is probably one of the best times to trade FX since 2009 due to central banks increasing interest rates for the first time in years. There's different speeds at which central banks are moving, create divergences for currencies. If one central bank is high aggressively, but one central bank is not, that creates a clear strong and a clear weak currency. As central banks start increasing interest rates and growth varies across the world, this may create a volatile environment for FX, so there may be plenty of trading and possibilities for the astute trader. Great time for trading FX. Do come along. I'm running a webinar from seminar 6 to 9 p.m. Get to meet me in person. It'll be live, and I've got loads of great content and looking forward to taking through that. So if you are UAE based, pop in. Great to see you. Details of how to register are in the chat. Okay, we're going to have a look at the questions now. Yeah, CN saying interesting market reaction when trust capped energy debt GDP rose. Now she helps other sectors and GDP dives. Yeah, I don't find it that surprising, CM, because well, yes and no. Okay, yeah, it is surprising. There's so much fiscal stimulus. Why doesn't that lift the pound? But I was preparing comments for the Bank of England release, and one of the big concerns that I had was that extra fiscal stimulus was just going to encourage inflation. You know, if inflation is high, then all of a sudden you flood the economy with money. What does it make inflation? Worse. So although, like, I wasn't definitely calling for, the pound to tank by any means, but I did see it as a risk. And so, although it was surprising the extent of the move, in one sense, it does make this is a logical reaction, because really what pound traders are saying is that higher taxation is coming from Britain, higher interest rates are coming, because flooding the economy with extra money is just going to make the whole problem worse. The cure for high prices is not to make them higher. Okay, the cure for high prices is to cut high prices, and the only reason you cut high prices is by stifling demand, by raising interest rates. But yeah, good comments, Ian. Yeah, FTSE 100 not hit as other countries, as many international companies listed. It's a good point, CN. I'm just going to point that out for others. Like the FTSE 100, right, is doing a little bit better because a lot of the FTSE's companies earn in dollars. So when the pound weakens against the dollar, that's essentially a pay rise for that company. Now there's easy, some of my payments are done in dollars. So I think, oh great, so my dollar payments mean that I'm just making more money. So if you imagine that if you're a huge multinational company like BP or Shell, and you're getting all your money in dollars, then you exchange it back into pounds, oh, you've just literally had a boost to your profits and earnings. Yes, you're right. US dollar economy a little better than other majors. It's a good point. It's certainly helping the dollar strength, isn't it? Both the risk-off bids and general economic outlook. Russian ruble is exception to rising rate scenario. Pound itself will dampen inflation, not vice. Pound rise will itself dampen inflation, not vice versa. Yeah. Thanks, CM, for your comments. Good group of comments there. Yeah. Nahabes, what's the rationale you might be looking for any of your medium-term trade ideas? So the only the medium long-term trade idea I have is like in copper at the moment, and I'm just staying pretty flexible. Otherwise, I'm largely in cash. Now copper's fallen what 30% since March highs. Where is it? Let's have a look. Let's have a look. It's about 30% fall. Yeah, 38% fall from peak to trough. The outlook for copper remains robust over the next 2 to 5 years. If you look at the expectations for copper demand, it's expected to grow over, to get higher to 5 metric tons. World consumption expected by sort of 2035. We've got demand for copper increasing across China, Vietnam, Mexico, India. China, with their big pivot towards green energy, expected to really ramp up their copper demand. So a lot of copper miners are saying that there isn't the supply to meet this demand. And to get a copper mine operational is a lengthy process, around 10 years. So medium term, I do favor buying copper, but that's like a 2 to 5 year outlook. That would be like the medium term trade. Otherwise, Naha, maybe shorting the pound from 1.0500 would be suitable. I think that could be a reasonable area to look to shorting the pound. Let me just show you that here. If you got all the way back up to that 1.1500 region up here, I'd find that suitable for shorting right from that high level. Just that breakdown of this key overhead resistance, 1.1, 450, 500, somewhere like that. I would favor shorting the pound from there. Otherwise, you can see a bit of a short squeeze on the pounds. That does make sense, potentially, just looking for this to retrace. That's potentially looking like a huge V reversal bar, which would favor buying. You just got to have such a huge stop on this, and not necessarily worth looking at. So I'd only be trading this if we get news of some kind of BOE intervention. But obviously, the higher this goes, the less likely we're going to need a BOE intervention anyway. The threat of potential intervention may just be enough. Copper related to industrial production, says CN. Yeah, so copper demand in the near term is expected to fall, but in the medium term, I expect it to rise. But that's, you know, I want to see sentiment turn positive before I go long copper. Bailey can only push pounds so far. That's true. Able to lift it higher, and at the end of the day, I'm just looking for a run up to that pivot point after this rumor of BOE intervention. So keeping it very nimble. Short pound upon tech setup. Yeah, that makes sense. CN. So broadly speaking, the outlook for the pound is tilted to the downside, but you want to find a nice place to find and limit risk. So one obvious area would, yeah, it's just up to this region here. A retest of that potential trend line and look for selling from that level would make sense. You don't want to sell at these levels, and a short squeeze is possible, but you need to make sure you manage and define your risk well. You don't really want to have a 400, 500 point stop on this. You know, maybe a retracement down to maybe a pivot point possibly. Aside from that, you just need to be patient now with the majors. Dollar, best opportunity NAHA would be on a US core PCE miss, and then it's selling the dollar yen would be my go-to pair. Dollar yen, dollar Swiss franc downside would both make sense. Yeah, outlook on the yen. It's a good point. Just taking a look at the yen in case you missed it. The yen has been very, very weak for a number of weeks and months. You can see that the yen has been falling steadily all year. And if you just take a look from the yen's falls accelerated from March. This is the yen index. It has recovered off some of these lows after the Bank of Japan and Japan's government intervened to bring strength to the yen. They deliberately weakened the dollar yen pair by buying the yen, and you can see that here in the major pairs. You can see the dollar yen has been moving lower on that Bank of Japan intervention, and that has just pushed the dollar yen pair lower. Now, basically speaking, central banks generally struggle to intervene against markets and to manage to push markets one way. So generally speaking, the market will test the Bank of Japan. So this is not like a sell, because you think, well, the Bank of Japan has intervened at 145, maybe that's their level. It's obviously a reference level, but they haven't stated that as a level. Generally speaking, as long as the 10-year yields keep rising, that does put pressure on the dollar yen to keep pushing higher. So you can see, even though we've had the intervention, faded, we've had a move back up to that broken trend line. We're now right on that technical trend line. Is it buyers, is it sellers? Best opportunity here, Neha, is if we get a miss on the core PCE print in line with what I said earlier, then I would expect to find the dollar yen a sell-off, and I would just be taking short-term scalp opportunities down to daily pivot points. That would make sense. Yeah, yen, pray for dollar yen dive. I think that's basically the Bank of Japan's policy, and you can understand it, you know. And what the dollar yen pair needs is a big miss in the US core inflation print, and then that would send 10-year yields higher. And if you look at that close correlation between 10-year yields and the yen, what you see is that as 10-year yields rise, so does dollar yen. When 10-year yields fall, so does the dollar yen. Rising yields, rising dollar yen. Falling yields, falling dollar yen. All we need now is yields to fall lower, and then that will pull the dollar yen down lower with it, folks. Yeah, then buy it. That's about right, CN. So, you know, if it falls and then buy the dip, that does make sense, right, folks? I have to dash, my apologies. I am due in Dubai this week, so I won't be here for that Wednesday PCE print. If you can't remember what I said, do check out the recording before the print on Friday, so you're all ready for that. The preferred pair will be selling dollar yen or dollar Swiss franc. Thank you very much. CN, thank you for all your comments and questions along the way. It helps keep flavor and color. Thank you for your questions too, Naha, and I hope you all have a very good session. Thanks everyone now. Goodbye.